Dear students, I am Dr. Panduranga Nayak, Principal SP's College Bengal. We are in the chapter Assessment of Companies, Computation of Total Income. This is video number 6. Alright, we'll take up one more problem. And we are going to calculate taxable income or total income and the tax liability of Dravid Company Limited. Dravid Company Limited for the assessment year 2020-21. Profit and loss account is given and then additional information is also given. Let me explain additional information, and in the meantime related item in the profit and loss account also I will explain. Admissible depreciation 25,000. Look at the profit and loss account. There is no item called depreciation. There is an item, depreciation item is there 30,000. What you have to do is 30,000 should be added back, that is to be taken as inadmissible expense. This depreciation amount is from the financial accountant's point of view. That is what is allowed under IT Act under section 32. It is just 25,000. So add 30,000 to the net profit and deduct 25,000. Net effect is 5,000 addition. What you can do is alternatively, you can find out excess depreciation debited to profit and loss account. 30,000 minus 25,000. 5,000 is the excess depreciation debited to profit and loss account that you have to add back. The next, donation given to recognized charitable institution. So here donations are given 3,750. These are to the recognized charitable institution. I told you there are 4 categories of donations. One is no limit donations or without limit donations. Second one is with limit donations. Second category, that is donations eligible for 100% reduction. Next one eligible for 50% reduction. So it is a combination. For example, no limit donations with 100% reduction, or no limit donations with 50% reduction, or with the limit donations with 100% reduction, or with the limit donation with 50% reduction. Already you have learned in detail about this in the first part of this SEM. Further, I also explained it several times. Okay, here recognized donation to recognized charitable institution falls under with the limit donations and deduction available is 50%. We have understood this in the previous problem also. General expenses include a sum of rupees 14,000 investment in NSC. See, this is not allowed. It is inadmissible expense. This is an investment, so that should be added back while computing business income. In the case of individuals and HUF, there is a deduction under 80C. But for your information, 80C is not applicable in the case of corporate SSE or company SSE. So you may be tempted to take this under 80C because in the case of individuals, investment in NSE falls under 80C and deductible from gross total income. But here deduction is not allowed for corporate SSE under 80C. A sum of rupees 4,800 and rupees 800 paid towards municipal taxes and insurance respectively on property let out. So these 2 items are to be added back because they are related to income from house property, a different head while computing the total income. Investments were purchased on 1st July and sold on 1st March, in the month of March. That means it is not held for a period more than 12 months. That means it is short term. And again, it is in respect of securities, government securities. That means that is taxable at 15%. So that is the intention of giving this point or this additional input under point number 4. So this is an indication that it is short-term capital gain taxable at 15% because that's on government securities. And we assume that short-term capital gain has been, security transaction tax has been incurred in connection with this item. Alright, come to the item here. Income and the profit and loss account. So we'll look into the expenditure side. Salaries 1,25,000. Okay, it is very much allowed in the case of business. It's a business expense. It's an item of business expense. Rent and rates very much allowed. Fire insurance premium of this. Okay, you see here. No, okay. This is entire amount is allowed. And then entertainment expenses 7,200 is allowed. General expenses here two items are to be added back. One is NSC. Then next one is 4,800 municipal taxes and 800 insurance in respect of letter of property. So altogether three items are to be added back. Depreciation, okay, 30,000 add, then 25,000 deduct. Provision for any provision for bad debts, provision for depreciation, provision for taxation, these are not allowed. So it is added back. Then look at the income side here. Gross profit has to be taken as allowed item because then only you'll get net profit. Profit on sale of investments. So it is very clearly given. Here investment means government securities, and that is short term because it is not held for a period more than 1 year. So if it is held for a period not more than 1 year in the case of securities, then it is taken as short term capital gains. So falls under capital gain head. So it should be deducted. Interest on government securities. Interest on government securities, again it falls under income from other sources. So it should be deducted, not relating to business income head. Rent received should be taken under house property head. So that is to be taken as gross annual value. Dividend from Indian company falls under income from other sources. But the thing is, it is exempt up to 10 lakh. Therefore, that has to be deducted, but while computing total income, it is exempt. Okay, that's all. See the calculation. Starting point is net profit as per profit and loss account. In the computation of business income, 2,98,050. So it is drawn from this value, this profit and loss account, and that is this value. And then disallowed expenses or inadmissible expenses. What do you mean by this is expenses debited to profit and loss account but not allowed while computing business income. Okay, investment in NSC, I already told you this is not allowed, and in the case of individuals and HUF, deduction is allowed under 80C, but here since the SSC is a corporate SSC, deduction is not applicable under 80C. So here while computing business income you deduct. Municipal tax on let out property 4,800, that's relating to other head, so deduct. Insurance on let out house property, we are adding inadmissible expenses, so it is debited to profit and loss account, therefore you have to add back. Insurance on let out property 800. And donations, again donations, charity not allowed, that has to be added back, and donations are deductible under 80G. Depreciation 30,000 is added back here. Later on see we are deducting under what is allowed under IT Act 25,000. The net effect is 5,000. Provision for taxation 1,55,000. So if you add up all these things you will get 2,08,350. Well, let's say income to be treated separately. That means these are all the items which are related to other heads of income. So all these are to be deducted. They are not relating to business income. So income to be treated separately. Profit on sale of investment 18,500. So that is this one. Profit on sale of investment, that's on securities, and that is held for a period lesser than 1 year. So it is taken as short-term capital gain. Interest on government securities, that's relating to income from other sources. So not relating to business income, so deduct. Rent received is in respect of house property, not relating to business income, so deduct. Dividend from Indian company, it is relating to income from other sources, so deduct. Of course, there it is exempt. Depreciation allowed as per IT Act, it is 25,000 only, though it is debited to the extent of 30,000. So these are the deductions. So total deduction is 1,05,500, and that is to be deducted from the previous total 5,06,400. So residue is 4,09,000. This is nothing but a business income. Actually, business income could be taken here only and calculation could be shown here only, but this total income computation will be heavily loaded because of business income and so many items in this statement. So if you calculate the business income separately, here the net value can be taken and shown in the total income statement. Okay, we'll go for computation of total income of Dravid Company Limited for the assessment year 2020-21. Income from house property, see, rent received is given, no other value is given, like rent received or fair rental value, and then there may be rent received. So many other items are there. First you have to calculate expected rent. Expected rent must be compared with the actual rent received, whichever is less should be taken as gross annual value. So gross annual value is 40,000. Okay, municipal tax should be deducted here 4,800. So from the gross annual value, if you deduct this one 4,800, you will get annual value 35,200 is the annual value. Then from that you have to deduct standard deduction. Standard deduction is at the rate of 30% of annual value. So actually there are two deductions normally. One is standard deduction, other one is interest on housing loan. Here there is no interest on loan, construction or purchase of any house property. It's not there. Only item 30% of annual value 35,200. Of that 30%, 10,560. So income from house property, let out house property is 24,640. Business income is already calculated here 4,09,000. Capital gains, you came to know that it is short-term capital gain taxable at 15% back because that is in respect of government securities. So 18,500. Then income from other sources, interest on government securities 12,000. Dividend from Indian company, you have to take it under income from other sources, but it is not beyond 10 lakh. Therefore, it is exempt. So 12,000 is the amount. Alright, gross total income is 4,56,040. For your information, if the dividend is from foreign company, that's not exempt. Only if it is from Indian company, it is exempt. So gross total income is 4,56,040. Now, what are the deductions available under section 80? Only one item, it is G. And what is the value? 3,750. It is towards charitable institution. So that falls under with limit donations deductible at 50%. So you need to calculate adjusted total income. What is adjusted total income? Gross total income as reduced by long-term capital, short-term capital gain. Here long-term capital gain is not there, but short-term capital gain taxable at 15% is there. So 18,500 should be deducted from 4,56,040, and the remaining value is adjusted total income. Once you calculate that, then you would apply the formula 10% of ATI or actual with the limit donations, whichever is less. So that is the qualified amount. In this problem, I will come to that little later once again. So qualified amount here is 3,750 only. I will show the calculation separately. Of that 50%, this will fall under 50% reduction. So 1,875. So our total income is 4,54,165. But that should be rounded off to the nearest 10. That comes to 4,54,170. If it is 164, that would have been 1,54,160. But if it is exactly half, then it should be taken to the next 10. Alright, see the additional information. Reduction under 80C, investment in NSC is not applicable to company SSE. This deduction under 80C is applicable in the case of individuals and HUF, into undivided family. Donation given to a recognized charitable institution falls under with the limit donation and 50% reduction. Okay, here you have to calculate qualified amount of deduction. What is qualified amount? qualified amount is 10% of ATI or actual with limit donation, whichever is less. Then what is suggested total income? Gross total income as reduced by short-term capital gain taxable at 15%, long-term capital gain taxable at 20%, and all other deductions under section 80 except 80G. Here only one deduction is there, short-term capital gain of 18,500. Deduct 18,500 from 4,56,040. Then you will get 4,37,540. Of that 10%, that comes to 43,754. Or this one, what is that? With the actual with the limit donation. Actual with the limit donations of 3,750. Of these two values, that is 43,750 or 3,750, whichever is less. So what is less? 3,750. So that is the qualified amount. That's why here taken. But that is subject to 50% reduction. So 1,875. Okay. Then profit on sale of investment in government securities is a short-term capital gain. That should not be EA. That is short-term capital gains taxable at 15%. Alright, tax liability on short-term capital gains you have to apply special rate 15%. So that comes to 2,775. Then there is no long-term capital gain. There is no casual income like lottery income, etc. So the balance of the total income is 4,35,670. How you got that? 4,54. This one, 170 is the total income. Less the short-term capital gain 18,500. So you'll get 4,35,670. On that 30%, we assume that it's a domestic company. So you'll get 1,30,701. So totally 1,33,476. Add surcharge to that. But here the total income does not exceed 1 crore. Sorry, it is written as 1 lakh. It should be 1 crore. 1 crore, not 1 lakh. It should be more than 1 crore. Then only, okay, surcharge is leviable. In the case of domestic company, it is 7%. And in the case of foreign company, it is 2%. If it crosses 10 crore, then it is 5% and, sorry, 12%, and in the case of foreign company, 5%. So here it is not applicable. So 1,33,476 is the tax on the income. But to that you have to add health and education cess. That is at the rate of 3% of this value. Whatever may be the value on this, 4% should be calculated. So that comes to 5,339. So if you add up these two values, you will get 1,38,815. Actually, this should be rounded off to the nearest 10. So 1,38,820. In case there is any advance payment of tax, then it should be deducted and the net tax liability should be calculated. So thank you very much.